I'm delighted to be joined again today by Jesse Proudman. Hi, Jesse. How are you doing?
Very well. How are you?
Good, thank you. So what's happening in the markets this week?
Yeah, we had an interesting sell-off again last night. This 12,000 Bitcoin price level is obviously showing some pretty strong resistance, which I guess is to be expected given sort of it's acted as a historical resistance line over the last 2 years or so. We've talked in the past about needing to break through that and hold a breakthrough through that for a number of days before we can really consider that support instead of resistance. So interesting to see that big sell-off. The more interesting thing to me last night, though, was sort of Ethereum leading that drop. A lot of sell-side pressure onto the Ethereum asset class, and I think it's given Ethereum's sort of meteoric appreciation this year, not totally unexpected. I think we've got a lot of market participants who are heavily levered long in that asset class, combined with a lot of purchasers as a function of sort of the rise of DeFi over the last couple of months. So I think that there are potentially folks that are a bit over their skis at the current price levels. So a pullback not totally unexpected, but it's certainly been a fascinating 24 hours.
Well, in relation to Bitcoin, some of the analysts tried to explain it as, well, it is indeed a safe haven asset again, because, you know, the other risk-on assets are moving in the other direction. What do you make of that argument?
Yeah, I think it's hard to quantify Bitcoin in relation to the traditional financial ecosystem. In our perspective, it stands alone, sort of outside the traditional financial ecosystem, and it does so because the market participants are largely interacting with this asset class for very different reasons than they buy gold or they buy sort of other risk-on hedge investments. So for us, folks are involved here because it's a new technology, it's a different technology, and it's a different monetary hedge than sort of what has existed. And so we sort of think of it as its own entity, and we don't think about it in relation to the traditional financial ecosystem.
Now, when you say people are over their skis in DeFi, how are you working on mitigating those risks yourself?
Yeah, so our fund does not actively trade in any of the sort of DeFi assets today. It's certainly a space we've been watching very closely. There's a number of issues that we're concerned about, starting off with the fact that sort of the mania and the price appreciation happening here over the last 30, 60, 90 days really is reminiscent of the 2017 ICO bubble. So it's just sort of, it feels very similar to that movement where you have a lot of capital flowing into untested ideas, and which is not to say they're bad ideas, but they're just new and nobody knows how they'll play out. And then I think that the really interesting component here is that this movement, this whole DeFi movement, is the first time we've had all these interweaving smart contracts, and nobody really understands sort of the risk factors there, particularly when it comes to Ethereum's price point. So a lot of these contracts within the DeFi ecosystem use Ethereum as sort of the collateral for a lot of the lending, borrowing, derivatives offerings, et cetera. And they rely on the ability to liquidate that Ethereum should the price fall to be able to cover user balances so that nobody loses capital. And I think the interesting thing here is we're at a point where the gas price on Ethereum is so high that it might not be possible for a lot of these smart contracts to liquidate their holdings fast enough to sort of deal with a material reduction in price in Ethereum. So if we go back and we look at sort of the events of that second week in March, where price fell dramatically over the course of a couple hours, we had the ability, a lot of these protocols had the ability to go liquidate their assets, and there were sort of one or two occurrences where that wasn't the case. But in this scenario, the network is congested, and the network is congested because everybody's actively using it, using all these protocols. And so if we see a material impact in price, I think there's a lot of unknown with what could happen with all of the billions of dollars that are locked up in these lending and derivatives platforms.
Yeah, absolutely. And what do you think about the fact that we call it decentralized finance, yet there's only a few select few who can afford the gas fees or who can afford to invest in it. You know, when do you think that'll open up?
Yeah, I mean, so Vitalik had a great tweet yesterday talking about gas fees and the entire notion of sort of the auction market. You know, to me, the fact that it's called decentralized finance, and yet many of these protocols are sort of owned and operated by centralized parties or individuals, that's the more interesting and sort of comical component of all of it. It is on chain. I think there's really some compelling and fascinating elements of the fact that it operates on chain, and we even saw that with Hester Pierce commentary yesterday or the day before, talking about the fact that DeFi sort of exists outside the realms of traditional regulatory framework. Like, it's going to take some additional thought and consideration from a regulator's perspective on how to look at all of these things because of that smart contract based nature of all of this. But yeah, there's many sort of interesting components here. Certainly, the gas is a big part of it. At the price point we're at, it means you've got to be moving material amounts of money to sort of compensate for the costs of executing all of these contracts. But it's a work in progress, right? All of this has been an experiment and a work in progress over the last decade, and Ethereum and Vitalik and the entire Ethereum Foundation certainly are aware of the capacity limitations of the network, and it's something they've been working on for quite some time. We've got Ethereum 2.0 sort of around the corner, which I guess is been around the corner for a while, but
corner, yeah,
right. But we're getting closer. So at some point here, we'll see that platform launch, and that should have hopefully a material impact on fees. And at the end of the day, this is all just a big experiment, and everybody's sort of figuring out what works and what doesn't work, and where we need to fix components of this technology.
In the meantime, the lawyers are getting very excited. So
and very rich.
Yeah. Thanks, Jesse. Thanks so much for joining today, and we'll speak to you soon.
Great, appreciate it.